Hussbus, bus stop.
What's up, everybody? Happy Friday. Nick Hussey here, the Hussey Team Mortgage Advisors, with this week's
Hussbus, bus stop.
So today I wanted to talk about 3 common mortgage misconceptions I see in the industry every day. Let's jump in here. So first common mortgage misconception is that having your credit pulled will have a huge negative impact on your credit score. This is not true, all right? So at the start of the pre-approval, pre-qualification process, us as mortgage guys usually have to do a credit pull on you. This will give us your credit score. It will also give us a list of all your current credit debts, which helps us qualify you for your certain loan product, interest rate, etc. We have so many people every time at the beginning step that are really worried that this credit pull is going to drop their score 20, 30 points. Where in reality, the most it will drop or impact your credit score would be 3 to 5 points, and typically it will have no impact on your credit score. All right, so this is something that I think is overhyped. I wouldn't be worried about getting your credit score at the beginning of the process if you are serious about buying a home and getting pre-approved for a mortgage. Second mortgage misconception, and this has to do with other marketing I'm seeing out there, is this notion or other lenders marketing free refinances, all right? You're seeing this a lot where the lenders say, buy a home with us now when rates are high, and then we will offer a free refinance later on. Now, I'm seeing these free refinances and reading these fine print, and they are not necessarily free, all right? I believe it's tacky marketing. So what you're seeing with these free refinances, again, is one of 3 things. One, they're not giving you the best rate out there, all right? They're actually jacking up this refinance interest rate, which gets it back a big lender credit, which is covering the closing cost. Another thing they are doing is just wiping their typical lender fees, all right, which could be an underwriting fee, processing fee. We don't have these anyway. These are all junk fees, but they're getting rid of these lender fees and still charging you third-party fees like appraisal, credit report, property taxes, escrow, all this other stuff. So it's not necessarily free, but they're just wiping out their lender fees. Or the last thing they're doing is just rolling the cost into the loan amount, all right? Now, this is a smart way to handle refinance, so you don't need to bring any money to the closing table, but it's not necessarily free because you're still wrapping all that cost back into your loan amount, all right? So something to be wary of. If you see anybody offering these free refinances, check the fine print, ask them questions, because I would bet 99% of the time these aren't free. They're doing something with the cost, okay? And my last number 3 mortgage misconception, one of the most common ones out there, is that you do not need to put 20% down to buy a home, all right? So many people believe that they need a full 20% down of the purchase price to buy the home. You do not. We have options that go 3% down. We have options with 0% down. You can get a seller's assist to help with some of the costs, but 20% down is really only seen when you're trying to get rid of mortgage insurance on a conventional loan. There are so many other options for lower down payment out there, and of course, more if you want to go more. So hopefully this was helpful. I know I kind of run through these videos quick, rambling around, but those were 3 mortgage misconceptions. Get educated. If you're looking to get pre-approved, hit up the Hussey team. Market's hot, baby. Let's go.
Hussbus, bus stop.